For me, sitting here representing Coca-Cola, talking about doing business on a continent that we are heavily invested in is quite an easy thing to do because the opportunities in Africa are quite immense. And we all realize that part of the success of doing business in Africa is about engaging in these markets, but engaging in them fully. I say when you invest in Africa, you have to invest completely, which means you become an integral part of what it takes to drive socioeconomic development in these markets. You cannot come to Africa and invest and just worry about your narrow business that you're involved in. You have to become involved in the issues, the topics that are pertinent to those markets. For me, that has been the success of Coca-Cola in Africa across 53 countries over the last 80 years. That means that during periods of crisis or difficulty or pain, you don't pack your bags and leave. You settle in, you ride through those difficulties, you continue to invest, build capacity, build skills, build capability. That's very important in Africa. But the topic we're talking about here today is about looking at the things that we need to do to make doing business in Africa more conducive, easier, to encourage more trade among African countries, and start to build more scale by opening up Africa's borders. It's a very fragmented continent, we all know that. The question we should be asking ourselves, are we prioritizing all the right things that we need to do to open up these national borders and allow goods and products and services and investment to be able to flow freely between these markets? I believe that we do not have a huge need for more policies and more ideas or frameworks around how to do this. And by the way, we're not trying to tackle a new problem. Many other regions have tackled these problems. The solutions are very well defined. And I think we have enough organizations on the continent who have the right policy frameworks to make this happen. The question is, how do we make it happen faster, more decisively, and with more impact? And we have to challenge ourselves to say, we have to get away from the mode of intellectualizing these ideas and focus on actually implementing the policies that we've defined and ensuring that we do that quickly so we can get the results that we're looking for. Trade between African countries today is a big challenge. The physical, the process, the policy challenges are huge. It is much easier for us as a manufacturer of juice drinks in Kenya to buy passion fruit from China. It's cheaper to buy it in China, move it to Kenya, and bottle it in Kenya, sell to Kenyans, than it is to buy next door in Uganda. Why is that the case? It is not that difficult to figure out what it takes to ensure that you have a viable source of supply next door, you ensure that you have the right quality, the right regularity of supply, and that you have the infrastructure to facilitate the movement. Why does it take me a short amount of time to move goods from South Africa to Nairobi than it takes me to move goods from Kampala to Nairobi? It shouldn't be the case. But these are problems that we can tackle. They're within our control. We shouldn't look elsewhere or outside for the solutions. We have them within our trade organizations, our institutions. We spend a lot of time talking about what we're going to do to convince the EU to change their common agricultural policy and the impact on Africa. That's a waste of time. There are things that are within our control in Africa that we should be focusing on doing. It's about how do we make trade easier among African countries. But not just for the big companies like ourselves. We can overcome the barriers that we face. I can decide that because I cannot move goods from, fruits from Uganda to Kenya, I could import them from China. But the local and small entrepreneurs who are going to be the solution to our problem around accelerating development in Africa, it's not going to come from the big companies, it's going to come from small companies. What are we doing to ensure that these companies can overcome these barriers also? How do we remove these barriers to make it easier for them to grow and flourish in this environment? I believe we have to challenge ourselves to say, we are going to make commitments, they will be firm commitments, with clear timelines and metrics, and will hold our bureaucrats, as well as all of the partners who are supposed to partner with the bureaucrats, the civil society, the politicians, the private sector who has to play a role, will all hold them accountable for their contribution towards meeting these deadlines. make those clear, make them documented, and we'll hold each other responsible for these commitments. For example, the private sector has a big role to play. We can talk about encouraging trade, but if we do not start doing business with our own local suppliers, we talk about the difficulty of accessing capital. Maybe the banks are sometimes scared to deal with these small, untested entrepreneurs. But there's a role for us as people who buy goods from these small vendors to partner with the banks and jointly mitigate the risk, because we know this supplies a little bit better than the banks may do. How do we partner together to make it easier for the banks to lend to these people? How do we start working with these local vendors to ensure that we can raise their skills and capabilities so they can supply more reliably and with better quality? Those are things that the local private sector partners can get involved in to help support the work that the politicians and the bureaucrats are doing. So we all have a role to play in this, and we have to start asking ourselves, what commitments are we making to come to the party and contribute meaningfully to accelerating the pace of regional integration in Africa?
Doing business in Africa. You can't afford to be without Africa Investor.